All right, so March 10th, 2025.
Yeah.
Global markets, right? Kind of a wild day, wouldn't you say? I mean, you look at the U.S. and well, it's a bit of a mess, frankly.
Yeah, definitely a roller coaster over there.
It's giving me some serious Black Monday vibes, all that
Mm.
red on the screen. But then, you peek over at the A shares, and it's a totally different story. It's actually looking kind of optimistic in some spots, especially when you consider certain, key sectors and all.
Yeah, there's a real contrast going on.
So listeners, wherever you're at with this stuff, seasoned investor, just starting out, or somewhere in between, stick with us. We're going deep on this, pulling out what matters from all the market moves and news just for you. And don't worry, we're keeping it concise, no need to drown you in data. We've been through the reports, the articles, all that, and we're here to deliver, well, the signal, not just the noise.
Absolutely. And what really jumps out right away is that contrast you mentioned. The US seems like they're spooked by some political stuff, some economic anxieties. Meanwhile, China, it's almost like they're in their own world, focused on internal policies and tech, tons of tech. It really shows you how complex things are globally now, economically speaking.
Totally. Two different worlds colliding, almost. So let's set the scene a little bit. Numbers-wise, U.S. markets, ouch. Dow Jones down a solid 2.08%. NASDAQ, worst day since September 2022, I think, a full 4% drop. S&P 500, not much better, down 2.7%.
Some serious hits across the board.
But the one that really made me do a double take,
Yeah.
Tesla, 15% drop in one day. Just gone, poof.
Yeah, 15%, that's not something you see every day, especially for a company like Tesla. They're the face of electric vehicles, cutting edge tech, all that. So when they take a hit that big, it makes you think, like, are investors getting cold feet about these high growth companies? Maybe with all this policy uncertainty on the horizon, it's a definite sign to watch.
And all this while, get this, China's rolling. Specifically, their ONI market, that's electric vehicles for folks who don't speak Mandarin, they're booming. February sales up almost 80% year on year. 80%. That's
And
insane.
it's not just growth, that's a tidal wave.
It's like they're in a whole other dimension, economically speaking. And it's not just EVs, They're pouring resources into tech, robotics, really going all in on the future. Crazy, right?
It's two completely different movies playing at the same time. One's all doom and gloom, trade wars, recession fears,
Yeah.
and the other one, it's all, green tech, robots, the whole shebang. It's wild.
It's wild. And just to spice things up even more, you've got Elon Musk, right, getting into it online with the Polish foreign minister, all on X, the platform formerly known as Twitter, of course. We'll get into that whole mess later. But, it just shows you it's not all about numbers and charts. Geopolitics, personalities, even a random Twitter beef can send ripples through the market.
Definitely. It's all connected in a way you wouldn't expect. A spat online can reflect or even influence bigger tensions on the world stage, and that can definitely mess with how investors are feeling.
Okay, let's break down that U.S. market meltdown a bit more, shall we? We're talking Dow Jones down 890 points, NASDAQ having its worst day in ages, S&P 500, you get the picture, it's a bloodbath.
Yeah.
But let's go back to Tesla for a sec, because that 15.4% drop, their worst since September 2020, I think. That's massive. And like you said, a whole lot of value just disappeared. So what do you think was the main thing that sent everyone running for the hills?
Well, a lot of fingers are pointing at former President Trump, actually. Remember those comments he made on Fox News
Yeah.
about transitional turmoil and how his trade policies could lead to a recession? That seems to have really spooked people, investors, I mean. They're worried about, protectionism coming back, tariffs, all that, and what that'll do to company profits, the economy, the whole nine yards.
So just the thought of those trade wars firing up again was enough to send the market into a tailspin. And it wasn't just Tesla, right? Seems like it was a pretty widespread panic across, well, all things tech, and then some.
Oh, absolutely. It was a chain reaction. You've got Apple down almost 5%. NVIDIA, they're like the kings of AI chips, also down 5%. It's not looking good when the big players start taking those kinds of hits.
And it wasn't just U.S. companies either, right? Even Chinese ADRs. Those are shares of Chinese companies listed on U.S. exchanges. For anyone who needs a refresher, they felt the heat too. Alibaba down almost 6%. Bilibili, even worse, down 9.5%. I mean, that just shows you the world's a small place when it comes to markets. What happens in one place can definitely ripple out and hit others, especially when you're talking about trade and all those anxieties.
Exactly. Even companies that do most of their business inside China, they're still getting caught in the crossfire. It really highlights how intertwined these global supply chains are and how a trade war, even the threat of one, can create chaos everywhere.
Yeah, it's a tangled web we move, right? And the negativity It wasn't just a U.S. thing either. European markets got dragged down too. German DAX down almost 1.7%, UK FTSE 100 close to a full percentage point lower. It was like a global wave of, well, fear, basically.
It shows you how much influence the U.S. still has, even with their own economic issues. When they sneeze, the rest of the world catches a cold.
But there was one interesting counterpoint to all this gloom, and it came from Hong Kong. Their market did dip a bit, sure.
Yeah.
But get this, there was a record amount of southbound trading, meaning investors from mainland China were snapping up Hong Kong-listed stocks like crazy, almost 30 billion Hong Kong dollars worth. So what's that telling us? Are our mainland investors seeing something we're not?
Well, it could be a few things. Maybe they think Hong Kong stocks are a bargain right now, especially compared to mainland China or the U.S. after all these drops. Or it could be part of a bigger long-term strategy, shifting assets around based on how they see certain sectors playing out. Diversification, maybe. It's hard to say for sure, but it's definitely an interesting wrinkle in all this.
It definitely is. Now, stepping back a bit, let's not forget about, well, the elephant in the room, or maybe a couple of elephants. We've got the war in Ukraine still raging, instability in the Middle East, all these things that are always simmering in the background, adding to the general unease.
Right, those geopolitical factors, they're always there, adding fuel to the fire. They can mess with commodity prices, throw supply chains into chaos, and just generally make everyone nervous. Even if they weren't the main cause of the specific downturn, they're definitely part of the bigger picture of why everyone's so jittery.
Okay, so let's focus in on a more specific trade issue, and that's the tension brewing between China and Canada. We're seeing China slap tariffs on some Canadian agricultural products, which, well, that's never a good sign. What do you think are the likely fallout effects of this escalation?
Well, for Canada, it's pretty straightforward. They're going to have a harder time selling those products to China, which is bad news for their farmers and everyone connected to those industries. And for China, well, they might end up paying more for those goods or have to scramble to find new suppliers. And of course, it just adds to the overall tension in global trade, which nobody really benefits from in the long run.
And this isn't just some abstract trade spat either. It's already having real-world effects. We're seeing a big spike in the price of futures. Now, for those who aren't up on their Chinese agricultural commodities, is rapeseed meal, usually used for animal feed. Why? The sudden price jump.
It's all connected, right? With Canadian agricultural products potentially becoming more expensive or harder to get because of those tariffs, people are looking for alternatives. And rapeseed meal is one of those alternatives. Higher demand, limited supply, prices go up. It's Econ 101.
It's amazing how a trade dispute in one corner of the world can cause these ripple effects in seemingly unrelated markets. It really highlights how interconnected it all is.
Exactly. It's like a delicate ecosystem, and when you disrupt one part of it, you never know what the full consequences will be.
So all this trade tension, whether it's U.S.-China saber-rattling or the China-Canada situation, it all adds up to a pretty unstable global economic environment. That kind of uncertainty makes it tough for businesses to plan, for investors to feel confident. It's not a recipe for success.
It's the opposite, really. Uncertainty breeds caution, and caution often means less investment, less growth, and more fear. It's a vicious cycle.
Okay, enough doom and gloom for a bit. Let's talk about something a little more positive, and that's what some folks are calling the warm breeze of policy support in China, especially when it comes to tech. Specifically, we're seeing some real action in Guangdong to boost their AI and robotics industries. What's the main thrust of this support?
What's interesting about Guangdong's approach is they're not just throwing money at the problem. They're looking at the whole picture, the entire industrial chain, from R&D to manufacturing to actually getting these technologies out there and used in the real world. And they're talking about legislation, which means they're serious about creating a whole ecosystem for this stuff to thrive. People are comparing it to how they supported the whole ERNIE market, electric vehicles, in the early days. And we all saw how that turned out.
So they're basically trying to replicate that success story, but with AI and robotics this time. Smart move, really, if you think about it strategically.
Yeah.
And it's not just Guangdong, right? Wuhan's also got some ambitious plans for AI by 2025. What are they focusing on?
Wuhan's all about, well, they're calling them intelligent agents. Basically taking these large AI models and making them more specialized, more focused on solving specific problems in the real world. And they want to create these intelligent agent spaces within their industrial parks, which is basically a fancy way of saying they're creating hubs where companies and researchers can work together, share ideas, and, actually get these intelligent agents out there doing stuff.
So it's not just about building cool AI in a lab somewhere. It's about actually using it to solve real-world problems.
Yeah.
And doing it collaboratively, which is always a good thing. It's like they're trying to bridge that gap between the theoretical and the practical, which can be tricky.
Exactly. It's one thing to have a brilliant idea, but turning that idea into something that actually works, that's where the real challenge lies. And it seems like China's really putting a lot of effort into making that happen.
And speaking of turning ideas into reality, there was some pretty exciting news from Shum Robotics. They just unveiled China's first, get this, general-purpose embodied foundation model. They're calling it GO1. So what exactly does that mean, and why is it such a big deal?
Okay, so embodied foundation model, it sounds complicated, but it's actually pretty cool. It's basically a foundational AI model that can be used for all kinds of robots. And get this, it lets them learn new skills just by watching videos. Yeah, you heard that right. No more painstakingly programming every little movement for a new task. This model, it's like giving robots a basic level of intelligence that lets them learn on the fly, visually, like humans do in many ways.
So it's like teaching a kid how to ride a bike by showing them a video instead of having to explain every single step and nuance. That's pretty revolutionary.
Yeah.
And they got some pretty aggressive plans for this year, right? They're not messing around.
Nope, they're going all in. They're talking about shipping thousands of these humanoid robots this year, and they're expecting to see a huge jump in revenue. It's ambitious, for sure, but it also shows how much confidence they have in this technology.
It really does feel like those sci-fi movies where robots are doing all sorts of tasks alongside humans. It's not so far-fetched anymore. You mentioned Tesla's Optimus robot earlier, and this GO1 from Roos. It feels like we're at a tipping point where that vision is becoming reality.
What's really exciting is how fast it's all happening. We're seeing this merging of powerful AI with advanced robotics, and it's not just in labs anymore. It's moving into the real world.
Yeah.
And the potential, it's huge. I mean, Deutsche Bank, they're projecting that the robotics market could be worth $75 billion by 2035. And by 2050, they're talking trillions. That's a whole different level.
Those are numbers that make your head spin, for sure.
Yeah.
And it really drives home the point that this isn't just some niche technology anymore. It's poised to revolutionize entire industries, from manufacturing to healthcare, you name it.
It's not just about replacing jobs either. It's about creating new possibilities. Imagine robots doing dangerous or tedious tasks, freeing up humans to do things that require creativity, problem solving, the things we're really good at. It's a whole new world of possibilities.
Okay, so let's shift gears a bit and talk about another interesting development in the AI space, specifically the world of AI agents. There were reports that ByteDance, the folks behind TikTok, they were trying to buy Manus, another player in the AI agent game, for something like $30 million. So why is this a big deal, and why did the Manus founder reportedly say thanks, but no thanks?
Well, this whole AI agent thing, it's getting hot. These are basically AI assistants, like superpowered versions of Siri or Alexa that can do all sorts of things for you automatically. And ByteDance, with their massive user base and all the work they're doing on large language models, it makes sense that they'd want to jump into this market. But 30 million, it might have seemed a bit lowball, especially when you consider that Monica, another AI agent company, got a much higher valuation. And, founders, they're often driven by more than just money. They want to build something, see their vision through, and sometimes that means staying independent.
So it was about more than just the money. It was about control, about the freedom to chart their own course. Makes sense, especially in a field that's moving as fast as AI.
Absolutely. And who knows, maybe they're betting on even bigger things down the line. It's a high risk, high reward kind of game.
Speaking of high growth, let's get back to those impressive numbers from China's gray market. Almost 80% growth year on year in February. Penetration rate closing in on 50%. Those are some serious stats.
Yeah, they're killing it in the EV game. It shows just how strong the demand is over there and how effective the government's been in supporting the transition to electric. I mean, 50% penetration, that's a major shift. It's not a niche market anymore. It's becoming the mainstream.
And it's the domestic brands that are really leading the charge, right? They've hit a 70% penetration rate, which is crazy. Plus, you got new players like Xiaomi jumping in, and they're already making waves. The competition's heating up, and that's good news for everyone, right? More innovation, more choices for consumers.
Competition is the engine of progress, right? And China's got that in spades right now in the EV space. It's a dynamic market, and it's moving fast. And the government's not just sitting back and watching either. They're actively supporting this whole transition, like with those subsidies in Shanghai for residential charging infrastructure. They're covering both DC and AC chargers, making it easier and cheaper for people to switch to electric. It's a smart move.
It's like they're really committed to making this happen, not just talking the talk, but walking the walk, as they say.
Actions speak louder than words, right? Especially when it comes to policy and economics.
Okay, so while things are looking rosy in China, let's not forget about the elephant in the room, or rather, the elephant across the Pacific. We talked about the U.S. market jitters earlier, and, well, those concerns about Trump's potential return and his trade policies, they haven't gone away, have they? It's like a dark cloud hanging over everything, even the good news.
You're right. The market's reaction, it speaks volumes. Investors are clearly worried about what a potential Trump comeback could mean for the global economy, especially with his stance on trade. And, that uncertainty, it can be just as damaging as the actual policies themselves.
So let's talk specifics. What are we actually looking at here in terms of these proposed tariffs?
Well, he's talking about a sweeping set of tariffs basically across the board, starting April 2nd. And then there's the immediate 25% tariff on steel and aluminum kicking in this Wednesday. And then there's the real kicker, a potential 250% tariff on Canadian dairy and lumber. That's not just a nudge, that's a full-on economic assault.
It's a pretty clear signal that he's not afraid to use tariffs as a weapon, and that's got everyone on edge. And it's not just the stock market that's reacting. We've seen oil prices drop too, both WTI and Brent crude. So what's the thinking there? Why are oil prices taking a hit?
Well, it's all about expectations, right? When you see these kinds of protectionist policies coming down the pipeline, it makes people worry about a global economic slowdown. Less trade, less growth, less demand for everything, including oil, so prices go down. It's a pretty classic reaction.
It's all connected, isn't it? One policy shift can have these ripple effects across entire industries, even those that aren't directly targeted.
Yeah.
So what about the A-share market? Are there any specific sectors that should be, battening down the hatches, so to speak, given this whole trade uncertainty?
I'd say any sector that's heavily reliant on exports or, sensitive to global demand should be extra careful. Things like non-ferrous metals, for example. If trade wars start heating up, they could be caught in the crossfire.
So caution is the word of the day. Now let's get back to that little bit of Twitter drama we mentioned earlier, the clash of the titans, Elon Musk versus the Polish foreign minister, all playing out on X, formerly known as Twitter. That was quite the spectacle.
It was definitely entertaining in a slightly terrifying kind of way. You've got the foreign minister reminding Musk about how much Poland contributed to Starlink in Ukraine, and Musk just fires back with, "Shut up, little guy."
Not exactly diplomatic, right? And then you've got Senator Rubio jumping in, talking about how important Starlink is for Ukraine's communications. It just shows how these tech platforms and the personalities behind them, they're not just playing in the digital world anymore. They're shaping real-world events, geopolitics, even war.
It's a whole new level of influence for sure. And for Musk, that day, well, that was kind of a rough one all around, wasn't it? You get the Twitter spat, Tesla's stock taking a nosedive. There were reports of a big cyber attack on X, and he even said he'd gotten death threats. Not a great day at the office.
Yeah, not exactly a day to remember fondly. It's a reminder that even the most powerful people, they're not immune to the chaos of the world, both online and offline. And all this, it can have knock-on effects even in the A-share market. Any stocks that are, part of that Tesla concept or involved in its supply chain, they could see some volatility.
Right. Tesla's a bellwether stock, so when it moves, especially that dramatically, people pay attention. And that attention, it can translate into action, buying or selling, even in related companies halfway across the world.
Okay, so let's switch gears again and talk about something Trump said that day, which was actually pretty insightful, even if you, disagree with his politics.
Yeah.
He talked about this difference in how China and the U.S. think about the economy. He said China's got a 100-year vision, while the U.S. is obsessed with quarterly earnings. What do you think he was getting at there?
I think he's highlighting a real difference in their systems. The U.S., with its elections every 4 years, the constant pressure on companies to meet those quarterly earnings targets, and the focus on shareholder value above all else, it creates this short-term mindset. It's all about what's happening right now, not what might happen in 10, 20, 50 years. China, on the other hand, they've got this more centralized, top-down approach, and they're able to think long-term, plan decades in advance. It's a totally different way of looking at things.
And he even brought up how executive compensation works in the U.S., how a big chunk of it is tied to short-term stock performance. which, well, that just reinforces that short-term thinking, doesn't it?
Oh, absolutely. If
Yeah.
your bonus depends on how well the stock's doing this quarter, you're not going to be thinking about investing in some long shot technology that might not pay off for 10 years. You're going to
Wow.
focus on what's going to boost those earnings right now. And that can be a problem when you're competing with a country like China, which is perfectly willing to play the long game.
And China, as Trump pointed out, they're not just talking about the long term. They're putting their money where their mouth is. They're building up their technological pressure, their reserves in fields like quantum computing, controlled nuclear fusion. These are things that could take decades to pay off. But if they do, the payoff could be huge.
Exactly. It's a bet on the future, and it's a bet they seem pretty confident about. And, when you look at how quickly they've caught up in other areas like AI, electric vehicles, it's hard to dismiss them.
Okay, so let's bring things back to the here and now for a bit and talk about some domestic business and consumer trends in China. There were these rumors going around about a mandatory 6:20 p.m. off policy, which, well, that got people talking. Midea, one of the big appliance makers, they responded by talking about their 6 prohibitions against unnecessary overtime, basically saying, hey, we're already doing this. What do you think they were trying to signal with that response?
I think they're trying to position themselves as a company that cares about work-life balance, that values its employees. There's been a lot of talk in China lately about overwork, burnout, all that. And companies, they're starting to realize that a happy employee is a productive employee, so they're trying to adapt.
It's interesting, right? This shift in thinking about what work should look like, what a healthy work-life balance is. And then there were those rumors, which were later denied, about Hair, another appliance maker, supposedly mandating double weekends.
Yeah.
Even if it wasn't true, the fact that people were talking about it says something, doesn't it?
Definitely. It shows that people are, rethinking the traditional 9 to 5 grind. And if companies can figure out how to get more productivity out of happier, more rested employees, well, that's a win-win for everyone.
Okay, so shifting to the consumer side of things, McDonald's Japan just announced that they're raising prices on some of their menu items, blaming it on, you guessed it, inflation. It feels like we're seeing this everywhere now. Prices creeping up.
Yeah, inflation's the uninvited guest at the global economic party right now. And Japan, they've been pretty insulated from it for a long time, so seeing price hikes even at McDonald's, it's a sign of how widespread this problem is. It'll be interesting to see how consumers react. A little grumbling maybe, but as long as it's not too drastic, I think most people will adjust.
As long as that Big Mac stays within reach.
Yeah, okay.
Okay, last bit of tech news before we wrap up. ByteDance, back in the spotlight again. They decided to open source some of their core AI tech, specifically their MoE architecture optimization, which they claim makes training AI models way more efficient and cheaper. So why would they do that? I mean, it's like giving away their secret sauce, right?
Well, in a way, yes. But there's a bigger strategy at play here. They're trying to build an ecosystem around their large language model. And the best way to do that is to get more developers involved, get them using your tools, contributing to the project. And when you make something open source, it's like an invitation to collaborate. Plus, by showcasing these efficiency gains, they're making their tech even more attractive to developers. It's a smart way to build a community and gain a competitive edge.
So it's a long-term play, really. Not just about immediate profits, but about building a platform, a community, a whole ecosystem. And this kind of open source approach to AI, it could have positive spillover effects for other A-share companies too, right? Especially those in cloud computing and, well, all things computing power.
Oh, absolutely. The more AI development that happens, the more demand there's going to be for the infrastructure to support it. Cloud servers, GPUs, the whole shebang. And that's good news for companies in those sectors.
It's all connected, isn't it? Okay, so let's end on a cautiously optimistic note. We're seeing some signs of life in China's real estate market. Transaction volumes for secondhand homes in Shenzhen, they've been going up for 5 weeks straight now. Could this be the start of a real recovery?
Well, 5 weeks is a good start, for sure. Shenzhen's a major market, so seeing that kind of consistent uptick, it suggests that maybe, just maybe, confidence is starting to return. But, real estate's a fickle beast, so we'll have to wait and see if this trend holds.
And it's not just happening organically. The government's stepping in too, like in Suzhou, where they're rolling out these 3 lows and 1 wide financial products to make it easier for people to buy homes, especially younger folks. It's like they're trying to give the market a little nudge in the right direction.
Yeah, they're pulling out all the stops. Lower down payments, lower interest rates, longer loan terms, plus these special housing vouchers for, talented individuals. It's a pretty clear signal that they want to see this market recover.
It's like a classic playbook, right?
Yeah.
Market takes a dip, government steps in with some stimulus. Hopefully things start moving again. It's happened before, so maybe it'll work this time too. and a healthy real estate market. That's good news for everyone, right?
Huh.
It spills over into so many other industries.
It's a cornerstone of the economy, really. So yeah, fingers crossed.
Okay, before we go, I want to mention some pretty sobering comments from a big name in the private equity world, a guy named Yusin. He was talking about how his funds have taken some big hits lately, and he didn't just blame it on the market or specific companies. He talked about uh, systemic contradictions and shifts in the global structure. That sounds pretty deep, right?
Yeah, it does. It's like he's looking beyond the day-to-day ups and downs and seeing something bigger, something more fundamental shifting. It's a bit unsettling, to be honest.
And he even brought up Mao Zedong's famous paper tiger quote about American imperialism. He was basically saying that, recent U.S. actions are proving Mao right. And he was pretty critical of what he sees as American self-interest and a lack of universal values. That's a pretty bold statement, especially coming from someone who's, deeply involved in global finance.
It is. It's like he's saying that the emperor has no clothes, and he's not afraid to say it, even though it might ruffle some feathers.
And he wrapped up by saying that Trump's recent congressional speech could be the start of a major shift unseen in a century. That's a pretty weighty prediction.
Yeah, it's like he's seeing the beginning of a whole new era, a reshuffling of the global order. Whether he's right or not, and well, only time will tell.
Yeah.
But it's definitely something to think about.
Okay, so one last bit of international economic news. Japan reported a 3.1% increase in basic wages in January, which is their biggest jump in like 32 years. That's got to be good news for them, right?
Yeah.
Yeah, it's a big deal. Japan's been battling deflation for ages, so seeing wages rise like that, it's a sign that maybe, just maybe, they're turning a corner. And the market reacted pretty strongly, The yen went up, bond yields jumped. It's like everyone's suddenly betting on a Japanese economic comeback.
So after years of stagnation, maybe they're finally getting some momentum. And that could create opportunities for A-share companies too, right? If Japan's economy starts humming again, they'll need more stuff, and China's in a good position to supply it.
Definitely. It's something to keep an eye on, for sure.
Okay, last stop on our whirlwind tour of March 10th, 2025. And it's the always entertaining world of crypto. Bitcoin took another dip recently, which, well, that's not exactly news anymore. But what is interesting is that Strategy Company announced that they're going to issue $21 billion worth of preferred stock to, you guessed it, buy more Bitcoin. That's a big bet, especially considering their stock price hasn't exactly been soaring lately.
It's a huge gamble, but it also shows how much conviction they have in Bitcoin's long-term potential. They're basically doubling down, even when everyone else is getting skittish. But, the market, it didn't exactly love the idea. Both Strategy and Coinbase, their stock prices took a hit after that announcement. It's a reminder that crypto, it's still very much tied to overall market sentiment. When fear takes over, even Bitcoin can get dragged down.
It's a wild world out there for sure. And speaking of wild, I just want to mention this one last thing, which is more about the future than the present. Apple, those sneaky devils, they're apparently working on AirPods with built-in cameras. Yeah, you heard that right. Cameras in your ears. Supposedly for environmental scanning and navigation coming out in a couple of years. It sounds crazy, but remember when the iPhone first came out, people thought it was a gimmick too.
That's how it always goes, right? What seems outlandish today could be commonplace tomorrow. And who knows, maybe in a few years, we'll all be walking around with cameras in our ears, navigating the world in augmented reality. It's a strange and exciting future we're headed towards.
It is. Okay, so to wrap things up, we saw a lot of contrasting themes playing out on March 10th. The U.S., grappling with trade anxieties and a potential economic slowdown. China, full steam ahead on EVs and future tech, with the government providing a lot of support. It's a complicated world out there, folks, and there's no easy answers.
That's the truth. It's all about navigating uncertainty, weighing different factors, and trying to make sense of it all. It's a challenge, but it's also what makes it so fascinating.